Hello everyone, welcome back to my channel. So this video marks the end of the week number 62 in this road to 100k realized return challenge, and this has been a strange week, and this is the best adjective that I can find to characterize how this week went, because the market made some strange moves, and yeah, some of those were really unpredictable, at least from my side. And so I'm going to explain every step of the way as it happened over the course of this week, and all the rationale behind the decisions that I took when it comes to the trades that we did. And so yeah, let's get into it. Before we start, however, as you may notice, my voice is a bit rough. I got a bit of a cold, so yeah, so please keep that in mind. And yeah, so as this week was a bit different for starters. This week has been a bit different from the previous ones, because on every single day we incurred in some overnight risk, because all the trades that we did were trades on options that expired not in the same day but in the following day. All right, and for reasons that I will explain in a few moments, but just to give a brief overview of the week. And let's look right here. So this is our week, and we managed to collect here this amount, and we also have to account for this value right here, because as you can see, this position was closed on September 29th, so it was on Monday. This position came from last week. We did not account it for it at the time, because the position was still open by the end of last week, but now this week we close it on Monday, and this is the final result of the week. We managed to collect overall a little bit over $1,880, which is nice. It's a nice amount. It could have been a bit more, but still, given that the directions of the market over the course of this week, I don't think we can complain too much, because some of those, in my view, I did not see those coming. And so yeah, but I'll explain this as we go along over the days in the video. So probably the best way for us to do this, let's just duplicate here this window, and as we move along in the trades, I'm going to explain here basically what happened. Let's put here on the screen the IWM, because we don't have any positions at this moment. All our positions expired, and all the shares that we had were sold. And so yeah, let's put here our weekly graph, and this is the chart for the week for the IWM. All right, and looking here, as you recall, and I mentioned this in our last video, we sold two puts on XLF with a 53.50 strike price, right? And then later in the day, after the video was posted, the video to start the week was posted, we managed to buy back the calls that were sold on the previous Friday, and we sold those at 1 cent, and then we used those shares to open up another position, selling 12 calls with 21 cents right after. And so we managed to collect $252, and yes, still, yeah, these were the positions that we kept for Monday. As you can see here, we jump to the next day on the 30th. There was nothing remarkable on Monday, so the day went pretty smooth. There was no particular data coming around on Monday, as you can see here. But on Tuesday, we had a bit of a warning sign, in my view, because we had the consumer confidence coming at 10 a.m. and it came a bit below what was expected. The previous reading in the previous month was in August was 97.4. It was expected 96, and it came in 94.2. And of course, this is not a good development. I think that this may be something to do with this hump in the market that took place, but then the market recovered quite quickly to where it was by the end of the day. And in the case of our trades, it was pretty much business as usual. On the 30th, about an hour into our trading session, these options were already these calls were already 1 cent, given the downhill trend, the downward trend that happened early in the session. And then because at this point in time here, it was not possible for us to sell calls with a strike of 244 expiring the next day, because the premiums were too low. They were still existing, but it was around 4 or 5 cents. It was not really worth it, so we might as well wait for another opportunity, which it came earlier or late in the day, as the stock rebounded here, and then we managed to sell the 12 more calls at 10 cents here, 10 cents a piece. I basically left the order open until the end of the day, and by late in the session, 9:17 p.m. here, the order was filled with 10 cents. So yeah, and then we finished the day. on Wednesday, here there was nothing. Here, yeah, it was at least for me, it was a big warning sign for what would come, which was the ADP employment. ADP employment is basically an indicator of the private sector hirings for the month. And so even though in August 3,000 private sector jobs were cut, the expectation for this month was that there has been 45,000 new jobs created. However, it ended up being minus 32,000, which means that in September, private sector cut overall 32,000 jobs. Now, because of this big discrepancy, and I wanted to know more about what was this about, I went here to ChatGPT, and looking here, it says that private sector loss. I just asked what does the latest ADP employment report tells, and basically what happened that most of the job losses were in the service sector, all right, and leisure hospitality. This has probably something to do with tourism. Maybe some tourists may be avoiding the United States at this point. Some jobs were lost in the professional and business services. However, education and health services added 33,000 jobs. Now, of course, and when it comes to the actual business performance in the economy, these jobs are nowhere as productive in terms of adding value adding to the GDP and to the overall economy as leisure hospitality, professional and business services. But still, there it is something. But overall, this pictures a bad situation in my view to the overall job market in the United States. And there were smaller gains in trade, transportation, and utilities, but these were much smaller. And by firm size, you can see that most of the jobs were lost in the small business, probably because of the uncertainty that is going around in the economy with the tariffs and all that, and probably small businesses because they are more cash strapped. They have less wiggle room to go around in their businesses. They are probably in a situation in which they are much slower in hiring, and when they lose employees, when they lose jobs, uh, they don't replace it right away, and so this basically, in my view, paints a grim picture of what is going on in a job market. Now, of course, there is some interpretation in implications. There is some stress in smaller businesses, mixed signals in service versus goods, and probably the reason why the stock market didn't come down, is because, of course, as predicted, when a reading like this comes about, this could strengthen arguments for monetary policy easing, so interest rate cuts, because, of course, that's the only way they can. That's one of the main ways that the central bank, the Fed, has to foster a more vibrant job market. Now, given this situation, and the market basically shrugged this off, the market ended the day up relative to the previous day, and in here, October the 1st, so basically about an hour and a half in the session, we managed to sell those calls, we buy back those calls sold on the day before, on Tuesday, and then, because of the recovery of the stock, we managed to sell 12 calls with a better premium, 22 cents, so $264 in premium collected, and that's the way it was. We didn't do anything more. And then keep in mind that on Wednesday was then when the government shutdown occurred, and even so, as you can see, the market shrugged that development off. And when it comes to Thursday, now it came a critical point in the week. And why is that? Because quite in the middle of the session, about 3-4 hours in, we bought back. We already had an order to buy back those calls sold in the previous day, but as you can see here, only 10 of those 12 were bought back. And the reason for that is because of this. If you look here, at some point during the day of Thursday, at this point here in the market continued to rise, so the calls would have gained some value, but of course the theta, the time value that the option has, goes against this trend, makes the option losing value. So up until this point, the market went in a trajectory in which the value of the options were more or less constant, but because one force was offsetting another, the theta was offsetting the force of the delta. But in this downhill, in this downward patch in the stock, that's when those 10 calls were bought back and the stock reached 1 cent. But then, given this short upward trend, the stock never came back to 1 cent. The option never came back to 1 cent. And given the situation, and given the fact that the following day, on Friday, because, by the way, keep in mind, there were no economic data on Thursday. The government shutdown made impossible to have data released, so these jobless claims were not released, those factory orders were not released. But keep in mind that, of course, there was a possibility of the government shutdown to be resolved, and on Friday, the big day this week would be this employment data, this job market data coming, and at 8:30 Eastern time in the United States, so it would be here in Central Europe 2:30, so before the market opened on Friday. And as a result of this, the the implied volatility of the options were high because the premiums were inflated. And given this situation, I was expecting that this two things. First of all, the volatility and the high premiums for the options expiring on Friday would the volatility would come down by the time the market opened, because by then there was no uncertainty about this data. The data had been released by that point. But also I was expecting that, given this employment reading, ADP employment reading, came bad, I was also expecting that this data here would also come bad, because also here, as you can see, the ADP is seen as an early indicator of the US labor market health, and this is used to predict the official US government jobs report, which usually comes a few days later, in this case on Friday. And so I was expecting the volatility would come down, first of all, on Friday, once the market opens, and I would expect that the stock, the IWM, would not go up, because given the grim scenario that probably this employment report would paint. And so that is why I decided to make the following moves. So once we had these 10, first of all, I waited until the last two calls were bought back at 1 cent, but the price never came back, and so I had to buy these at 5 cents. And before this, I had to buy this back at the end of the session, all right, at 5 cents, so that then I could use these 200 stocks serving as collateral for these calls to sell another two calls expiring the next day on Friday at 88 cents, which is quite good, a quite good premium. And these 10 calls, when they were bought back, the stocks were released as collateral, and I used it to sell 10 calls with 90 cents of premium a piece. And so that is why we managed to collect this large premium over here, which ended up being 1,067.61. But that is why, for me, this week was super strange. As soon as the market closed, the stock continued to go up, and by the time I woke up on Friday, I saw the pre-trading market, and the stock was already north or up and above 245. So my calls would be already in the money. And as you can see here, as soon as the market opened on Friday, and keep in mind there was no economic data coming, the government continued to be shut down, and the stock just continued to rise unabated, and it reached the high in the session of around 248. And I was thinking, well, this would be close to $5,000 left on the table, which could be gained, but they were not, because I was not able to predict this move. I tried then to see what was happening, because this was super unexpected. And then I saw here that apparently there were some deals on Friday. New AI deals boosted optimism. Hitachi teamed up with OpenAI on energy projects. Fujitsu expanded work with NVIDIA. And apparently these developments on the field of AI basically offset completely the fact that the government is in shutdown, no economic data is coming, and probably bad data on the employment front, on the job market front. And so everything was shoved to the side, and investors just focused on these deals, AI related deals. Later in the day, and keep in mind, as it says in here, and this is also a piece of news already from today, October 4th, Saturday, and it says in here there is no immediate end in sight to the shutdown because, of course, disagreements between the Democrats and the Republicans. But then, even though later in the day this strong upward market subsided and the stock came back to around 246, which left me feel much better because, all right, I did not so much money was left on the table. It was around $2,400 that was left on the table, but still, given the fact that we were leaving so much more on the table earlier in the session, okay, not so bad. And of course, these calls were very much in the money. Buying those back would mean taking a huge loss. I just simply let those calls expiring in the money. The stocks were sold to 44. Keep in mind the same value as we bought those. So here when they were assigned, and here when they were assigned as well. So they were bought at 244. We were sold at 244. So we basically broke even, and we got the sum of these two values as the premium. So it was $3,134 in profit from premiums with zero capital gains, basically. Now, there were a few more trades, which, of course, despite the XLF, I bought those back yesterday to sell. First of all, I sold another put on XLF because with all this premium that we accrued over the week, we had more dollars of buying power available to sell another put on XLF, even though it was almost breaking even between the premium we collected, $2 and $1.51 in commissions. We basically broke even on this, $0.49. But we used this collateral to sell a put on ARKK, which left me with some more gray hair, and the reason for that is because here, as we sold, I just left the order open, by the way. I left the order open at 8 cents because I tried to, there wasn't, the order was not being filled, but I felt that, all right, it's not worth it to sell a put on ARKK with at less than 8 cents because of all the risk that entails. And we managed to buy it more or less around here, I believe. Yeah, so 6:51 p.m. So it was around here, all right. And then this has a 88 strike price. I could not. I was not next to the laptop to see what was going to happen, but when I came back, the stock was hovering around here, and I felt, well, after all the precautions that I had, because the stock was hovering at 89 and plus when I input the trade was filled more or less around here, and seeing that the stock in a matter of around 2 hours fell $2, it was a tough pill to swallow. And I was already thinking that, all right, I'm going to be assigned some shares, but the stock ended up recovering and ended up the put ended up out of the money, expired worthless, and so we managed to keep the premium and not having to buy any shares at all. But yeah, it was a roller coaster, even though it was only for one day. But yeah, this was a bit of a strange week, and yeah, not for the faint-hearted, for sure. For the next week, I've been thinking about this, given the fact that at the moment IWM is trading very close at all-time highs. The stock hit, I believe, a new all-time high intraday when on Friday because of this huge spike at 248. But I believe that at the moment the stock is trading very, very close to all-time highs at the moment, as you can see here. Yes. So yeah, it's a new all-time high. All right. And because of that, we have to keep in mind that many of these stocks have less quality than the ones on the QQQ. QQQ is also overvalued, and they're also trading near all-time highs, but many of these companies are very, very, very profitable. And so if both indexes are trading at all-time highs, I would rather put my chips on the QQQ than the IWM. However, the IWM is likely to benefit more from the upcoming interest rate cutting streak that is likely to come. The Fed will certainly continue to cut rates further in the future, and this is more likely to benefit more the small caps of IWM than the technological companies of QQQ. And so what I'm going to do, and also because the QQQ has a much deeper option chain, so you are more likely to still be able to continue to sell 0DT options even if you are assigned and the stock has a dip. What I'm going to do for next week, or what I intend to do, is basically split all this buying power among the QQQ and the IWM. So, and by doing this split, we are going to try to optimize as much as possible our buying power. We are not going to use or use at least as possible other ETFs such as XLF or ARKK. We are going to make the split between IWM and QQQ that best consumes or most closely equals in terms of aggregate amount of collateral to be used the entirety of this buying power. And so this also there's a high correlation between both, I'm not going to lie, but by doing this, if one of those will get assigned, it may be still possible that the puts of the other index will not be assigned, and then we can then use the other one to basically try to lower the average price of the shares that were assigned by selling more puts on that particular index, and then we'll probably make things a bit easier when it comes to trying to get rid of the shares. But yeah, we'll see. I have to make some calculations to see what is the best allocation between QQQ and IWM, but this is something that we'll have to see with real market data, with real prices, to see what are the best strike prices to go for, and to make this sort of optimization calculation to allocate among the puts. But so far, yeah, this is it. One last warning. I am not sure when I'm going to be able to post the video on Monday, all right? Next week is going to be a very busy one for me, and I'm not sure when I will be able to do it. I'm sure at some point I will be able to post the video, the start of the week 63, but don't be surprised if it takes on a completely different time, or, and I'm not expecting this, but or whether another video will be posted at all. However, for sure, a video will be posted at the end of the week. This is something that I expect that it will happen as usual. But yeah, this is it. Feel free to leave your comments in the comment section down below. This was a bit of a more extensive coverage and analysis of what happened, but given the market movements, I think this was very, very justified. Also, I'm available on LinkedIn in case you need to ask me any questions about the challenge, and of course, feel free to like the video and subscribe to the channel. And we'll reconvene at some time next week for the start of week 63, or rather to give you an an overview of the week at the end or on next Saturday. And yeah, I'll see you there.